So the EMCLOUD Index is essentially an index that tracks all the public cloud, i.e. public software companies. It's one that was initiated by BVP, which is Bessemer Venture Partners. They're a large US venture growth fund.
Yep.
And they've been around for a long time. And so now it's actually, I think this started formally, like officially, like a couple of years ago now, maybe. I don't remember the exact date, but it's now a recognized index. You can even buy like ETFs, exchange traded funds that mirror the EMCLOUD Index, and you can look up the ticker EMCLOUD. So I start with this because this graph gives a good illustration of how the EMCLOUD Index tracks to the S&P 500 as well as the NASDAQ and the Dow Jones. So each indices has a different set of underlying companies. They're also publicly traded companies. S&P 500 is the top 500 companies according to Standard & Poor's, which is a major rating agency based in the US. So it's kind of like the top like 500 largest companies, typically by market cap. NASDAQ is also a mixture of different companies underneath. It tends to be more like growth-oriented companies, which means there's tendency to have more tech companies in it. And the difference with that and Dow Jones is Dow Jones tends to be more industrial companies. So think manufacturing, et cetera, companies. In other words, Dow Jones tends to have more companies that are like balance sheet, asset heavy. NASDAQ tends to have companies that are more focused on P&L, et cetera. And then S&P 500 is the largest companies by market cap. So the reason I start with this is because it shows you kind of like the macro perspective of how public market investors are looking at these different underlying companies. And the reason this matters is ultimately because the same investors that invest in these public companies, namely which are large limited partners. So think your pension plans, your endowment funds, asset managers, et cetera, are also the ones that are funding VC and growth companies.
Oh, super interesting. Thank you so much.
So if you go back to the reason we had the post that way is if you go back to if you trace back to where the original source of money is coming from.
Yep.
Most of the money is coming from essentially pension plans, endowments, governments, family offices, corporates.
Yep.
And so how they think about macro directly impacts public company valuations, which then directly impact funding sources for VC and growth equity funds.
Yeah, because VCs will basically just reinvest what those will invest in the VC. So
exactly, yeah. It's really important to understand the incentives behind fund managers and how that then impacts behavior, which then results in new investments, follow-on investments, valuation, structure, et cetera, et cetera. So all things given, when we think about value in the financial markets, this is telling me that public investors are more eager to put money into public companies that are liquid, right, that are diversified across industry sectors than cloud, which is specifically software. And keep in mind, these are public software companies, so they're stocks that you can trade in and out daily. In private software companies, which are VC-backed, growth equity-backed, and they're burning cash, it's even like there's an even bigger swing from a risk aversion perspective.
Yep.
Because you invest into the company, you can't take your money out.
Yep.
And then if we take a further look back 3 years, right? You'll see the trend. So if we trace the dark blue line, you'll see the trend that. So I start with this because what I'm trying to say in general is that tech companies tend to swing more in one direction or another when there's a lot of volatility in the markets, which has a direct impact on investment across whether it's public tech companies or private tech companies. And also then by extension, how investors deploy their capital, which means instead of focusing on revenue, you start focusing more on gross margin. And in other cases, for larger scale companies, you focus more on EBITDA margin and cash flow generation.
Yep.
So it's a switch in mindset in terms of what you're like, where in the P&L you're focusing on, how you value companies as a result.
Yeah, and that's why there was such a big swing towards profitability.
Yeah.
Yeah.
And we've seen this, by the way, in the last recession. Like I started working in finance in 2007. This was it's slightly different triggers behind it. It was triggered really much by the credit market. Here it's triggered by the equity market, but it's kind of the same